Hey there, everyone. Today, I want to talk to you about the case for gold as an investment. And very important to start out, of course, I work in the finance industry, so we live in the world of disclaimers. I'm doing this video on the basis of helping to educate you and understand the role of gold in your portfolio, not to make any recommendations as to whether you should buy it or not. But I want to put to you a number of arguments, I think, particularly given the state of the world that we're in at the moment. The world is increasingly unstable. We're moving from a world that's being unipolar with America in charge to a world that's becoming much more multipolar with the rise, particularly of countries like China and Russia, and really sort of almost the breakdown of the way the world's been operating for the last 50 years. We're now seeing, for example, the rise of what they call the BRICS group, which stands for Brazil, Russia, India, China, South Africa. But actually 40 countries have signed up to this particular BRICS group, and they're talking about potentially making their own currency. So there's a lot of things going on in the world at the moment. The world is getting less stable. There's also been a build-up of lots of problems over the last 30 years in particular, with extreme debts in the Western world. Household debt is through the roof. And basically, we're long overdue for a very serious financial crisis. So that's part of the driver behind this video, in the sense that I do think gold has a very interesting place in people's portfolios, given the state of the world as we find it today. So the first one is diversification. In the Bible, there's a fantastic verse. It says, it's in the book of Ecclesiastes, chapter 11, verse 2, it says, invest in 7 ventures, yes, in 8, because you do not know what disaster may come upon the land. So we consider what's going on in the world at the moment with wars. We've had COVID a couple of years ago. We've had all these things going on. There is a very legitimate case to say that gold acts as a wonderful diversifier in a portfolio. Now, if you think about a traditional investment portfolio, often they're made up of different things. So people think of shares, they think of real estate, they think of bonds, they think of cash. There's different component parts, and the amount of money you have in each is probably going to be driven by your age, your stage of life, etc. So to me, the key issue with gold is it acts as a portfolio diversifier. It's another place you can have your money, and it will reduce your overall portfolio risk by having it there. So that's the first one, diversification. That's the first argument, I think, for gold. The second thing is it's often perceived as a safe haven asset. Now, no investment is truly safe in the sense they can all go up and down, but gold is very much safe in the sense it's a physical, tangible asset, and there's nothing that sits behind it that you need to be worried about. For example, it's not like a government bond, which is essentially where you're lending money to the government and the government goes broke. Of course, with the gold is always there. It doesn't go broke on you, so to speak, in the way that a government might, or in the way that business might. So it's a safe haven asset, and particularly also in periods of geopolitical instability. And that's one of the key things that I'm focused on at the moment. When we look at the world as it is, it's getting more unstable. There's risks of wars. There are already wars happening, but there's risks of more wars, and potentially even World War III. When you look what's going on in Ukraine at the moment, the thing that I've been staggered with is the unwillingness of politicians in the West to negotiate peace. You would think that we'd be trying to bring a peaceful conclusion, but no, what we're doing, we're sending more money, more weapons. No, none of those things bring about peace, despite the rhetoric that may accompany some of these things. It's basically a win at all costs sort of strategy at the moment that seems to be taking place, and therefore the world is certainly probably in a position of greater risk geopolitically than it has been for a very, very long time. So in times of instability, people often flock to gold. And to add to that sort of instability is the instability in the banking system. It's no secret that the level of debt around the world is enormous, especially household debt, but even government debt. Governments are running huge deficits, and the banking system, we saw it last year in the United States. It's in 2023, the couple of banks in the US went under. And part of that was because many of their reserves are held in long-term government bonds. And as interest rates have risen, the value of those bonds have declined, and therefore the reserves that underpin those banks have declined. And many of those banks and still to this day are sitting on huge amounts of unrealized losses. So once again, in a period of instability, whether it's in the economic financial system, as well as geopolitically, gold acts as a great safe haven asset. So that's the second thing. The third thing is gold is a very liquid asset. It's very easy to convert into cash. You can take it to a gold dealer and you can convert it into cash very easily, but you can also hold it in different forms. So the form I was just referring to is you can buy physical gold. You can go to a gold dealer, you can buy gold coins, you can buy gold bars. There's lots of different ways of holding gold, and we'll talk more about that in a moment. There's also other methods as well that you can hold gold, but the advantage of it is it's liquid. You can convert it into cash very easily, and therefore it's a very convenient asset. Of course, there is a potential slight downside here, and that is that you have to store it somewhere, but you can store it obviously in the vault of a bullion dealer, of a bank. I think holding some at home is possibly a bit risky if someone breaks into your house, obviously. But nonetheless, the point is there is a storage factor that you need to consider in that. Now, on that point, and that leads to the fourth point. So as I said, gold is liquid, but the other thing is gold is seen as a store of value. Gold's been around for thousands of years, and unlike what we call fiat currency, so the currencies of governments, the yen and euro and all those things, which often decline over time. In fact, the US dollar, a lot of people don't realize, is that since it first came into, or since the US Federal Reserve, which is the Central Bank of America, since it came into existence back in, I think it was 1914, the value of a US dollar has declined 97% or thereabouts. Whereas gold, in that sense, is a store of value. It maintains its purchasing power over a long period of time. And that's how it should be seen, I think, predominantly as a way of maintaining the value of your wealth over a long period of time. Of course, also gold is limited in supply in terms of, there's only so much gold that's been dug out of the ground and continues to be dug out of the ground, and therefore it's limited. And that helps obviously maintain its value. There's not a massive supply of it on the market. It's also seen as potentially a currency hedge. And I think this is one of the things that's very interesting at the moment. Currencies rise and fall, and they rise and fall often relative to each other, and in this case, relative to a fixed asset like gold. So if you look in many countries where they've got hyperinflation or very unstable currencies, countries like Argentina and in parts of Africa, etc., as their currencies weaken, gold, of course, retains its value. So typically, gold will rise in value relative to the currency. And in that sense, and that's what we're seeing gold do even against the US dollar. Gold is rising. It's currently close at the moment. As I record this video, it's very close to record highs as we speak. Of course, there's actual real demand that underpins it. In some countries, there's a big market for gold jewelry, and there's large gold industries in that respect. Of course, you can also get exposure to gold through you can obviously have physical gold, you can wear it, but you can also have gold in the sense of owning gold mining shares. So there's lots of different ways of getting exposure to gold, but there is genuine demand that underpins gold as an asset itself. Interestingly, and one of the things I think that's going on in the world at the moment with all the turmoil that we're witnessing is central banks are buying gold like crazy. Now, to be honest, it's probably a bad sign in the sense that it seems to me that central banks are preparing for more unstable times, and they're preparing for war potentially, because in some countries are repatriating their gold, so they store gold in other countries and they're actually repatriating it back to their own nation. So gold is a form of wealth that's held in reserve by central banks, and increasingly they're adding to that exposure at the moment. So I think that in and of itself is a very important consideration during these times that we find ourselves in. As I mentioned before, I gave the example of owning government bonds. One of the beauties of gold, and once again, this is one of the arguments, the case for gold, is there's no counterparty risk. It's not like a bond where someone, if you buy a corporate bond, if you, which is essentially lending your money to a large company, that company could go broke and default on that bond. whereas with gold, there is no counterparty risk. So in that sense, it's a safer asset than your typical financial assets, your typical what we call paper assets. So that to me is the important thing. Another argument, of course, for gold is its potential long-term capital appreciation. If you look at history, gold over time has gone up in value, particularly relative to other currencies and so forth, which often devalue in their real value over time. So to me, gold has multiple benefits, as you can see, whether it's the counterparty risk, whether it's the safe haven asset, whether it's a stable asset in the current uncertain times that we find us. But one argument that I haven't made yet, which is the one that it's often first linked to, is a hedge against inflation. That is true some of the time, but it's not true all of the time. There have been periods where inflation has been increasing and gold has in fact been going down. So that to me as an argument is not necessarily a strong one. If we were in a period of hyperinflation, I think that would become very true because gold would maintain its value. So in a period of extreme instability, gold I think would be brilliant in that environment. So that's a bit of a case for gold. But the other thing is, well, how do you get it? How do you get exposure to gold? Well, look, there's a couple of things you can do. One, as I say, is you can buy physical gold. So you can go to a gold bullion dealer and you can purchase actual gold. And there's different forms. You can buy bars, you can buy coins, all in different sizes. And of course, therefore, different values in terms of how much it's going to cost you. The other thing you can do is through the stock market these days, you can buy gold ETFs. So ETF stands for exchange traded fund, and you can literally buy gold in the way that you'd buy a normal share. There is lots of them on the market. Some are hedged against currencies and some are not. So that way you're getting true exposure to the gold price as opposed to just getting the mix of the gold price plus your local currency that you're buying the ETF in. So that's a consideration. The advantage of ETFs, of course, is you can buy and sell them very quickly and very easily. All you need to do is open up a stockbroking account and away you go. So that's very easy. Another way of getting exposure to gold, which is an interesting way, possibly the most volatile way, is by buying gold mining companies. So in other words, once again, you go to the stock market and you can buy gold mining ETFs where they have a large number of gold mining companies together, or you can buy individual gold companies. Now, the advantage of that is leverage. Basically, these gold mining companies have a certain fixed cost base to mine gold out of the ground, and therefore above a certain point, as the gold price rises, their profits are leveraged to the gold price, and therefore they can make very large gains, more so than the gold price is likely to do if you own just purely physical. So there's lots of ways of getting exposure to gold. That comes down to your particular situation, how much risk you want to take, and where you see it fitting into your portfolio. Like anything, it's not the only asset you should have. You should never put all your eggs in one basket, but certainly having exposure to gold, I think, is wise in the current world we find ourselves in. So I hope that video has been useful to you, and pray for God's wisdom over your finances. All the best. Thanks for watching.